Where is Palantir going? Can it make us rich or going broke? What's the market's mood at the moment and what should be our best approach? Hello everyone, I hope that you had an amazing day and lots of profitable trades. In this video, we're going to talk about Palantir and see if it's the right stock for your portfolio. As we know, over the past few years, things haven't always been great in the job market. Companies that were once considered as safe havens have been looking to reduce their workforce. And for many, it's been a traumatizing experience of a lifetime. At the same time, the rapidly rising inflation has been eating people's savings away in many countries that have only known deflation. So when every assumption about the reality is getting blurry or disappearing, we must seize this opportunity to start working towards our own financial independence regardless of what the external factors are. And one key step to make is to improve our financial situation by finding the growth opportunities of tomorrow and seize the ones that can multiply our capital, increasing the money available for later projects. Essentially, we're looking for the golden goose. And for many, Palantir is what they've been looking for. Over the years, it became so much more than just another tech stock asking for your money in exchange of empty promises. It has grown into a major player in the sector that can tell us a lot about the movement of capital and the appetite of money managers. The company has enough clout and prestige to arouse the market's curiosity as well as people's tendency to follow trends. It's a company that would often be viewed, and rightfully so, as the risk appetite of the market alongside others like Tesla or Nvidia. In this video, we're going to take a deep dive into Palantir and see whether it deserves to have a place in your portfolio. Before the video continues, I want to take a moment to thank you for coming to my channel and hope that you're going to enjoy your stay and to come back for more. If you like what you see, please consider to like, subscribe, and check out my channel for playlists of other companies I cover. With that being said, I hope you're going to enjoy today's video and let's get started. Over the past few days, Palantir finally managed to break through the previous tendencies and to stay clear of the $25, officially ending the current sell-off trend. The previous level held at like $21 to $23 have proven to be solid support levels after all, while the market entered in a new round of potential bullish momentum that has been slowly accumulating over the past few weeks. So far, despite the absence of positive catalysts, or real positive catalysts, the drift of summer trading volume as well as previous failed attempts to push the stock lower saw that the stock resisted above the $20 level, suggesting that this bottom might hold at least for the time being, while looking for actual reasons to consolidate further. Some additional reasons may include the upcoming rebalance of S&P 500, as well as the broadening scope of Palantir's operations, as at least this is what they've announced. These elements have been enough for many shareholders to take profit while waiting for better entry points, and now I would argue is what's also kind of influencing people to come back, or to at least give it some shot. So, some might have believed that the short selling was a good idea, but they were proven wrong by the price action and by the resilience by the shareholders' base. So Palantir is a stock made of momentum and a huge proportion of anticipation instead of, solid financial results and cash flows. The fact that its actual financial results are decent are not enough to support the valuation, let alone pushing that valuation higher. We can see that its widening scope have definitely grabbed the market's attention far more than anything else. And this is what I meant by reactivity. A lot of people are waiting for any sort of opportunity to pounce on this stock. So previously, the resistance levels have been identified at $25, for which the stock have been struggling to surpass, and the support levels were between $20 and $23. So it does seem like the stock's past history provides some stability to its price movements. These levels serve as important markers for investors, indicating potential areas of price reversals or continuation that have now been passed through. The short-term trends for Palantir stock appears to be moving up. The previous decrease in both interest and volume from investors are now old stories. The overall trend remains bullish, and the short-term weakening momentum did not transform itself into larger sell-offs. But of course, it did experience a period of uncertainty when failed attempts to reach $25 saw some profit taking, and then the price pulled back from 25 to 21. And then when the stock failed to go below 20, I would argue that this was the beginning of the recovery. Now, from a longer term perspective though, I would say that Palantir has a pretty interesting price action pattern compared to the all-time highs a few years ago. It's basically sitting on the same plateau back in 2021, when uncertainty eventually led to the massive bear market that lasted over a year. On a fundamental level, Palantir has always gathered a lot of interest from retail investors since its initial public offering. If anything, this might be one of the potential weaknesses for Palantir's long-term outlook, the fact that institutional investors have yet to own the majority of Palantir shares. This might be a sign that despite the company's solid business model, reliable revenue streams, and a lot of deep relationships, Palantir may be perceived as a potentially expensive stock by those who manage other people's money. This increased presence of retail investors also explains why Palantir is known to be a fairly volatile equity for a market cap of its size. Ever since the beginning in the secondary market, the sentiment has been overwhelmingly reactive because investors have been eager to capitalize on all kinds of trends, momentums, and events. Sometimes with reasons, other times without. So people were talking about the company's innovative approach on carrying business, as well as some philosophical considerations on the way up, and then talking about the wider tech sell-off, the insider sales, as well as high interest rates on the way down. Its journey on the stock market has been characterized, of course, by some intermittent periods of bullish enthusiasm followed by prolonged bear markets, dipping at one point below the $10 mark. And back then, things were not funny at all. So one significant aspect of Palantir's price movement is its correlation between the fundamentals and the macroeconomics news cycle. Events like geopolitical uncertainties, supply chain issues, interest rates decisions, or government regulations about narratives like AI or data might have significant impact on its share price and simultaneously affects the company's own news regarding like its financial performances and guidance pricing from analysts. Now, on the other hand, the relevance of analyzing news has been known to be limited. It can be something to observe to see whether, whatever direction you think it's going correlates with what everyone else is believing. Because the media outlets surrounding the company tries to reflect the narrative around the price action and not really to predict where the price action is going to go next. When the stock has been on an upward trajectory, there were a lot of positive news articles fueling further investor optimism and the echo chamber. During downturns, the negative news have been amplifying the selling pressure, accelerating the downward trends. So this probably goes for most stocks that you might be interested in. And the news articles might be interesting to confirm where is the wind currently blowing, but not the future direction. As things currently stand, Palantir has been able to maintain its bullish trend in the medium and long run, with diminishing marginal increase and occasionally pullbacks over the short term. The stock has shown resilience in recent sessions. The pace of its ascension has, definitely slowed for some time, but there's a growing need for additional catalysts to sustain any sort of bullish momentum. We know that. But what we have seen is that people are very hesitant when they want to short sell Palantir. Maybe they don't want to buy it, but it's a question of either go long or stay on the fence. One factor that might influence Palantir's future performance is its status as a large cap stock. With its market capitalization steadily increasing, Palantir is poised to solidify its position amongst the market leaders. Large cap status brings increased institutional interest and a broader investor base, which may contribute to more stability and more capital to pour in. So, it's essential, of course, to be careful, because at the moment, a lot of things are under flux. So even if we're aiming for the $30 or $35 next, it doesn't guarantee that we're going to achieve this in the short run. We might have something that will give us that impression and to motivate us to buy in. The next thing we know, the stock is down by 30% and we're left holding the bag. So we definitely want to be slow. We definitely want to be steady when purchasing a stock that I would say is better to hold for the long run than to trade in the short run. In terms of financial performances, it's one of Palantir's strong suits, and of course, it's enough to maintain the stock above a certain baseline. The stock has already been through periods of massive sell-offs way back in the 2022-2023 period. The rock bottom could be around sub $10, but with that being said, it's something to keep an eye on, since Palantir's financial reports are known to be able to move the markets over the years. So, the key levels that I tend to look at are cash levels, the gross margins, and the growth. The cash levels tells us if the company can satisfy its immediate needs with its own operations without dilutions, and that's a massive plus for those seeking stability. Companies need capital to put lights on, and that tends to be very important. Now, the gross margins is the amount of money made from, basically it's the amount of money that you can bring in the door minus the cost that you need to spend in order to bring that business in to begin with. In other words, whether the core business model works. And in the case of Palantir, it does. Now, something else to consider is that given its symbolic and size-related significance, investing in Palantir does come with its own upsides and downsides. Things that are proper to Palantir almost, or things that are proper to the stocks in that category. One of the primary reasons people are interested in Palantir is that we kind of see its growth potential, or we kind of see its, volatility that might be positive for us. Because it's often positioned and considered by the market as a leading player in the data analytics sector. It operates in a field with a lot of promise for the future of the economy, as businesses increasingly rely on data-driven insights to make decisions and to optimize their operations. Companies like Palantir are well positioned to capitalize on that trend. With its expertise in handling and analyzing large volumes of data, Palantir stands to benefit from the growing demand for data-centric solutions across various industries. Palantir's own financial stability is a pretty reassuring factor for investors because unlike many other tech startups operating at massive losses, Palantir has revenue-generating business models, and this reduces the likelihood of share dilution through frequent fundraising rounds, providing investors with a sense of stability and confidence in the company's financial health. Palantir has also demonstrated its ability to capitalize on popular demands or popular trends to generate significant interest on the market, especially amongst the retail traders who own the majority of its shares. It enhanced its visibility and appeal by entering into the world of artificial intelligence. And, at least the narrative in my eyes is pretty compelling. They have the data, AI needs data to train, so there you go, right? It's only like a natural extension for them to enter that market. But regardless of whether AI is going to work, this ability to capture the market sentiment and to leverage it to its own advantage underscores Palantir's potential for growth and success in the long run. Now, it also comes with its own risks and challenges, because one potential concern for investors is the possibility of legal contingencies about the privacy and data ownership. As a company that deals with sensitive information, Palantir may face regulatory scrutiny and a lot of legal challenges, which may affect its operations and reputation. Any negative developments in that area could massively affect the company's value in people's eyes. Another potential issue is the reliance on the public sector for contracts and to keep feeding the narrative that Palantir is going to get bigger. The government contracts are certainly lucrative and they always pay on time, but they also have a degree of uncertainty and arbitrary risks because they are subject to political and budgetary considerations. If government agencies decide to cut back on spendings or to shift their priorities, it could have a detrimental effect on Palantir's revenue and growth prospects. It is a massive angle for Palantir, so anything that happens to the public sector growth, it may have like a pretty detrimental effect on its ongoing success or at least outlooks in people's mind. Another downside is a possible shift of the narrative in the market for the years to come. Right now, data analytics and AI are very popular, but changes in policies, regulations, and frankly, just people's demands, needs, and desires may shift the perceived relevance and value of what Palantir is currently in. So if the market begins to favor other sectors or technologies, it could dampen the investor enthusiasm for Palantir stock and then lead to a decline into the market value. Now, because Palantir is one of the larger players in the sector, even if it starts to fall, it's not gonna be like a massive jump off the cliff kind of decline. It's probably going to decline slowly over time. And this, if anything, is one of the benefits of having a stock. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. Considering the current market dynamics and Palantir's ongoing performance, I do believe that if you want to own Palantir, you first have to have the assumption that AI and data analytics are here to stay, and that Palantir will remain a significant player. For the second part of the assumption is almost guaranteed, right? Because there's, at least for me, there's no reason to see that Palantir is letting others taking over its position. And also, I personally believe that data is also here to stay. It's going to be one of the key currencies to own in the economy of tomorrow. And AI, well, at the moment, we're training models that start to resemble artificial intelligence. It doesn't mean that stuff like ChatGPT, they are true AI. And for that, almost everyone involved in the sector is aware of this. So I think that we have yet to see any sort of true AI to come. And Palantir is probably going to be one of those companies to provide a component of this actual artificial intelligence to be. So because of this, I personally believe that it's worthwhile to own Palantir in the long run. And in the short run, because Palantir seems to have cleared off a key price level, the $25 level, it would be smart to start buying Palantir shares and to keep accumulating over the next few months. The maximum exposure should be between 8 to 10% of your portfolio, and the holding period should go beyond the next 24 months.